Is Connecticut the best state in America to buy a house right now? I know that question sounds crazy, but when you look at the data, you'll realize that Connecticut is actually the fastest growing housing market in America. With data on Reventure App showing that home prices in Connecticut are up a massive 11% over the last year. This crazy appreciation makes Connecticut the #1 appreciation housing market in America. Home prices are growing faster here than anywhere else, and it's not even close. Which sounds a little strange, everyone, because Connecticut's not the first state that I think a lot of you are imagining would be the one with the fastest home price growth, but that's exactly what we're seeing. And the reason has to do with the fact is that there's actually a massive shortage of homes on the market in Connecticut. That's right, everyone. There's almost no inventory. And when there's no inventory on the market, it means that prices are more likely to go up. Something that's very important for you guys to understand as a home buyer or an investor, maybe you're a builder or a flipper, you got to understand what's driving these home prices in 2024. And we can see that in Connecticut, it's an utter lack of inventory. The inventory of homes for sale is down 60% from normal, meaning that there's only 3,000 homes for sale on the market today compared to, get this everyone, 14,000 before the pandemic. So the inventory in Connecticut's down 85%. A signal of a massive shortage. This inventory shortage is one of the reasons why the Reventure App home price forecast score is 65 for Connecticut, indicating that prices are still going to go up over the next 12 months. And there's not a lot of markets you can say that about in America right now. I mean, with mortgage rates at 7%, with prices still very high, we're seeing prices go down in a lot of cities. We're seeing a big collapse in buyer demand, and we're seeing an increase in listings, especially in markets like Texas and Florida. Those pandemic boom towns, they're in a downturn right now, whereas Connecticut just keeps appreciating. Particularly in a market like Hartford, everyone. Hartford has registered 12% year-over-year appreciation. That's the highest of any large metro in America. We can also see that surrounding counties like Toland and Litchfield also have 11% appreciation, while New Haven has 11% appreciation, and Fairfield County has 10.8% appreciation. Of course, there's some massive differences between these counties, everyone, and one of the biggest differences is price point. We can see Fairfield County is actually one of the most expensive counties in America to buy a home, with a typical home value of $600,000. Fairfield County is priced as if it's almost in New York. Like Fairfield is right next to Westchester County in New York. These are some very expensive suburbs, particularly we zoom in here closer to Stamford and Greenwich. We can see typical home values of around $2.2 million. However, most of Connecticut is not this way. Most of Connecticut is actually much more affordable. Like if we click on the Hartford metro, we can see there's lots of zip codes where you can buy a house for $270,000 or $180,000 or $250,000. Now, of course, you got to be very careful about where you buy in a market like Hartford, because there's some not so nice parts of town, but actually, on the west side of Hartford, you have some really nice homes and some pretty safe areas. Moreover, New Haven, this is a market that is also really, really strong right now in terms of appreciation, but again, it's one with big differences. You can see the typical value of a house around Yale University is $312,000. If you go to the east side of New Haven, it's $250,000. Whereas if you go to the west side, it's $563,000. It gets a little nicer. And one thing that I think is really interesting about Connecticut's housing market is that it's defying the odds. There's almost no one a couple years ago who would have told you that Connecticut would be the best performing housing market in America right now. And particularly like the big institutional investors, many of them like totally ignore a state like Connecticut. They don't think it's business friendly, the taxes are too high, and those things are actually true. Property taxes in Connecticut are very high, something we're going to talk about in a second. But fundamentally speaking, Connecticut is much more affordable than New York or Boston, and as a result, it's attracting home buyers who are moving in from those cities who don't want to pay those crazy prices, especially home buyers who can now work remote and still keep their job in New York or Boston, or only take the train into those cities a couple times a week. I want to just go here on Zillow so you guys can get an idea of what we're looking at if you're a home buyer in Connecticut, right? If we head to the west side of Hartford, which is a bit of a bitter area, you can see that this would be the standard type of house, a 3-bed, 2-bath, 2,200 square feet. I mean, this kind of looks like the all-American home when you look at the pictures. Looks really nice. It's on the market for $460,000. It was built in 1938. You can see in 14 hours on Zillow, this house already has 142 saves, which indicates a lot of interest. Now, this house actually previously sold in May 2020, like right when the pandemic hit, for $330,000, and now it's up to $460,000. And so that's a 40% increase in price in just 4 years, which is a lot. It's a lot, everyone. But actually take a look at this. This house, if you go all the way back to 2010, it sold for $335,000 in 2010. So 14 years ago, it sold for $335,000. From that perspective, you get a bit of a different take. Is that actually from 2010 to 2020, the prices here didn't go up. There was very little appreciation, indicating that the appreciation that's happened in the last 4 years is kind of a catch-up. Now, your monthly payment, if you were to buy a house like this, would be $3,300 a month, which is pretty high, everyone, for a house that's $450,000. The reason is higher mortgage rates, but also your taxes and insurance is going to be $1,000 a month. So you're going to spend $12,000 a year on your taxes and insurance. And that's really probably, I would say, the biggest downside to buying in Connecticut is that you're going to be paying some of the highest property taxes that exist in America. With data on Reventure App showing that the property tax rate in Connecticut across the state is 1.8%. And in markets like Hartford and New Haven, it's closer to 2%. So 2% of the home value paid in property taxes every year. That's a lot of money. In comparison, if you were to go down south to a state like Alabama, your property tax rate is 0.35%. Literally, you'd be paying 1/6 the amount in property taxes in Alabama. You'd be paying 1/4 the amount of property taxes in South Carolina. So these lower property taxes in the Southeast is one of the reasons why you see a lot of people from the Northeast move down south. However, that flow of people moving down south has not stopped Connecticut from being the #1 appreciation housing market in America today, which is something that if you're a home buyer there, you're an investor there, you got to really pay a lot of attention to. If prices are still appreciating at 11% a year, even as this bubble is popping, that's a signal of underlying resilience and strength in the housing market. It makes it less and less likely that this housing market will experience a crash. And one of the reasons why Connecticut is unlikely to experience a crash and prices aren't likely to go down by much is because they're not even that overvalued to begin with. Prices in Connecticut, in general, they're more affordable outside of Fairfield County, and they really did not go up very much prior to the pandemic. Let's take a look at this, everyone. The typical value of a house in Connecticut is $384,000, which you can see is way lower than Massachusetts. It's like 70% cheaper in Connecticut than Massachusetts, which is where lots of the people buying houses in Connecticut are coming from. Now, you can see this value in Connecticut, it's gone up a lot since 2020, right? It went from $260,000 to $384,000. But you can see actually prior to 2020, Connecticut's housing market was in the doldrums. Really no appreciation pretty much from 04, like 04, 05 to 2020, there was no growth. There was almost no growth in home values, which is why there's like this room for prices in Connecticut to keep going up. Another way to look at this is the home value to income ratio in Connecticut. The long-term average home value to income ratio is 3.8, meaning over the last 20 years, on average, home prices were 3.8 times median income. Yet today in Connecticut, it's 4.2, which is pretty close to that long-term average. You can see in the last bubble, it got up to 4.8. And then before the pandemic, it was 3.2. And so the fact that the value to income ratio is pretty close to this long-term average means that prices in Connecticut are only about 10% overvalued. They're only about 10% overvalued, which makes it one of the least overvalued housing markets in America. For comparison, Tennessee, Georgia, and Florida are all about 30% overvalued when you look at their current home value to income ratio compared to history. Idaho's 33% overvalued. Connecticut's only 10% overvalued. And so I wouldn't be surprised if at some point in the next 3 years, there is some type of correction in Connecticut, or maybe the value growth slows considerably. That's likely to happen at some point. But in the short term, there's still a big shortage of inventory. Prices are still likely to go up due to that shortage of inventory. And what I would suggest that you guys do out there, if you're a home buyer in Connecticut or any other state, whether it's Massachusetts or New York, educate yourself on what this data is saying in your housing market. Because if you have a handle on the overvaluation rates, if you have a handle on where the inventory is trending, you are going to be able to make an educated determination if prices are likely to keep going up or keep going down. And by making that determination, you could potentially save yourself lots and lots of money. Because the last thing you want to do as a home buyer is buy into a market that's about to crash. Like there was lots of people who bought into Austin, Texas at the peak of the bubble, right here, when values were 550,000. Now they've gone down by almost 20%. And there's people who are underwater on their mortgage right now in Austin, people who are defaulting and being foreclosed on and who are really in a tough position. No one wants that to happen to them. And ultimately, it doesn't have to happen to you. If you use the data available to you guys on Reventure App, www.reventure.app, you can make a much more educated decision about if it's a good idea to buy in these different housing markets in Connecticut. Particularly if you access some of these premium data points like the overvaluation rate. We could see Hartford was undervalued before the pandemic. Now it's starting to get a little overvalued, 13% overvalued in Hartford. Maybe see some future downside here, but for now, prices are still going to go up. The cost of that plan is $39 a month, but what I would actually encourage a lot of you to do is sign up for the annual pass and get a 15% discount on the monthly rate. Signing up for this annual pass will allow you to track these data points month by month so you can see how your market is trending and discover when the right time to buy is.